Okay, so imagine this. You bet your entire company's future on Bitcoin. That's exactly what these digital treasury companies did. And you know what? For a while, it looks like an absolutely genius move. They piled billions and billions into crypto, right on their balance sheets. But now the market is turning, and that massive all-in bet is facing its very first real test.
See, they were all following the same playbook. And in a booming market, it seemed completely foolproof. But that leads us to the huge question we're going to tackle in this explainer. What on earth happens when the market turns and the rules of the game just suddenly change?
All right, so before we dive into all the drama, let's just take a step back and make sure we're all on the same page. What exactly are these companies we're talking about?
To put it simply, a digital treasury company is a firm that goes out and buys digital assets, we're talking Bitcoin, Ethereum, you name it, and holds them directly on its balance sheet. And look, this isn't just some side investment for them. This is a core, fundamental part of their entire business model. And for most of these firms, there was really only one playbook to follow, and it was pioneered by the company that pretty much kicked off this whole trend, MicroStrategy. They literally wrote the book on how to pull this strategy off at a massive scale.
So it only makes sense to start with the leader of the pack, right? Let's look at MicroStrategy and see how this new market pressure is forcing them to completely rethink their game plan.
And make no mistake, they are the undisputed leader. I mean, just get a load of these numbers. They're holding over 640,000 Bitcoin, which they bought for more than $47 billion. The scale of this operation is it's massive. Now, at the absolute peak of the market, this strategy looked like pure, unfiltered genius. Their unrealized profit, and that's the on-paper profit before you actually sell anything, it soared to an incredible $32.47 billion. That's a staggering return. But, well, fast forward to today, and that picture has changed dramatically. That profit has plummeted to $21.9 billion. Just think about that for a second. Over $10 billion in paper profit just vanished in only 10 days. It's a wild swing that really shows you how volatile this strategy can be. And naturally, this has had a direct impact on their behavior. After a really aggressive buying spree, their purchasing has now completely flattened out. It seems like raising new cash to keep buying more Bitcoin has gotten a whole lot harder in this new environment. Okay, so let's move on to our next case study, Bitmine, because this is where things get really interesting. They are taking a completely different approach. Instead of pumping the brakes like MicroStrategy, they are flooring the accelerator. And this slide right here shows that contrast perfectly. While MicroStrategy's buying slowed to a crawl, Bitmain is doubling down, big time. They just spent around $700 million to add over 177,000 Ethereum to their holdings. I mean, talk about a different reaction to the market dip, right?
Bitmine's focus has always been Ethereum, and they now hold over 3 million ETH. But all that aggressive buying comes at a price. With an average buy-in of over $4,000, their entire position is now officially underwater, which just means it's worth less than what they paid for it. And this number? Wow, this number really highlights the incredible risk of their strategy. At the market peak, they were sitting on a profit of over $1.5 billion. Today, they're facing an unrealized loss of $323 million. It's a super bold move, but it's one that's costing them, and costing them dearly. At least for now. All right, finally, let's look at our third company, Metaplanet. They're actually the second largest Bitcoin treasury out there, but their story reveals another critical, tricky layer to this whole challenge, and that's crumbling investor confidence. This chart tells the entire story. Metaplanet's actual Bitcoin position, it's holding up pretty well, actually. They're sitting right around break even. But then you look at their stock performance, and it is down a staggering 77% from its peak. So, what gives? Why the massive disconnect? Well, it seems like investors are worried about more than just the price of Bitcoin. They might be scared of hidden debt or the risk of a wider market collapse, and so they're punishing the stock way more than the asset itself. So, where does all of this leave us? Well, I think it's safe to say the era of easy money and hype is over. The whole narrative has shifted. It's not a race anymore to see who can buy the most the fastest. Now, it's a grueling test of who can simply survive. So let's just quickly recap the new reality for our three companies. For MicroStrategy, their buying power has been pretty much neutralized.
For Bitmine, they're still adding risk, betting hard on a rebound. And for Metaplanet, they're left fighting just to convince investors that their strategy is still a good one.
And this brings us to the final and, I think, most important question. With all the easy gains gone, this downturn is going to separate the true believers from those who were just chasing momentum. So who's going to survive this test? Well, that's the billion-dollar question that's still unfolding right before our eyes.